Hello, this is Ken Lane with Center Square Asset Management. In an effort to jumpstart economic activity, in mid-2014 the European Central Bank introduced a policy of negative interest rates. Japan has since done the same, leading many to wonder, could the same thing happen here, and what are negative interest rates? Negative interest rates usually occur in one of two ways. The first is government directed. Banks are required to hold a certain amount of capital, known as reserves, on deposit at the central banks. In normal economic environments, it is more profitable for banks to lend than it is to keep their money on deposit at the central banks, so banks keep the amount of reserves they are required to at the central banks, but usually not much more. However, in periods of economic distress or uncertainty, banks tend to cut back on their lending. When that happens, extra reserves kept at the central banks can start to build up. To discourage the buildup of excess reserves at the central banks, those banks sometimes adopt a policy of negative interest rates, essentially charging banks a fee for keeping money on deposit at the banks. Rather than absorb a guaranteed loss by keeping capital on deposit at the central banks, banks will hopefully respond by lending it out instead, which should help the economy grow. We can also sometimes see negative interest rates at work in the free market. This occurs when the buyer of a bond pays a premium which is greater than the face amount of the bond plus the interest that will be paid at maturity. For instance, an investor may pay $1,100 for a bond today that's going to mature at $1,000 in 12 months and pay $50 in interest along the way. Now, if you do the simple math, essentially that person has just put in $1,100 today for something that's going to pay them between now and maturity $1,050, guaranteeing themselves a $50 loss. Now, naturally, you might say, why would anyone do that? Wouldn't it just make more sense to hold on to your money? And in fact, since Japan adopted their policy of negative interest rates, sales of safes in Japan have soared, indicating that many people are doing just that, putting their money in a safe, hoarding it, and not investing it or putting it on deposit at any banks. While that may make sense for them, for larger investors, institutions, corporations, people with millions or tens of millions or maybe billions of dollars, keeping money in a safe in a basement under your mattress really isn't safe or realistic or practical. In either case, negative interest rates are certainly a warning sign. If central banks need to penalize banks to encourage them to lend, or if investors are willing to lose money because they are so concerned with safety, the economy is probably not functioning very well. For now, I do not expect to see negative interest rates here in the US. The economy isn't great by any means, but it is growing. Banks are lending without being forced to, and interest rates on government bonds, while very low by historical standards, aren't anywhere near zero or negative. If you do have questions or concerns about how our low inflation, low interest rate, and potentially deflationary environment might impact your investments and affect your financial future, please feel free to give us a call here at Center Square Asset Management at 1-800-630-9313 or 518-477-5468. Thank you.